What's up guys, welcome to my channel. You clicked on this video because you are interested in making trades on Luno, whether it's Bitcoin or Ethereum or whichever coin it is. In this video, I'll show you how I use the TradingView exchange platform instead of using the basic and easy way to buy Bitcoin or Ethereum using the market orders. Because ultimately you can reduce fees, you can get better entry points, and your returns can be better as well. There's also a lot more indicators and tools and controls that you have over the platform that can ultimately help you improve your trading strategy. With that said, let's jump straight to my screen and hope you guys can follow along. So first of all, when we click on the Luno, it will show us the normal homepage where you can see the basic prices and graphs of Bitcoin or Ethereum or whatever. You should be able to navigate around this side. You would normally click buy here, but this isn't necessarily the best way to do it because there's a lot of fees involved, and you're kind of following the buy and hold strategy. So what we are going to do, we are actually going to exchange Bitcoin or Ethereum, and we're going to click on the exchange tab in the right hand corner, and it will open up a different looking screen with a lot of stuff on it. But let me show you guys how I use the platform. So first of all, before we get started, we need to add some indicators, and this will help us determine the trend of that specific currency. So first of all, I'm going to jump to indicators and I'm going to click on MACD. You can just type in MACD and it will pop up. This is an indicator that I really like, and I'll show you how we will be using all of the indicators together. Next, we are going to use the RSI, also known as the Relative Strength Index. A Relative Strength Index is a momentum oscillator that measures the speed and change of price movement. And lastly, we'll add moving averages, exponential moving averages, and we'll add 3 of them. So the first one is automatically on 9. The second one will change to 20, and we'll just change the color of the line. Let's make it like yellowish. And the third one will change to, let's make it green, and we'll make it 200. The moving average is basically using a line to indicate the average historical price over 200 days or 9 days or 20 days or whatever. So the reason why I use the 200-day moving average is to indicate which direction the chart is trading. You'll see the green line is the 200-day moving average, and basically explained in a very simple way, when your graphs is above your 200-day moving average, it means that it is trending upwards. Exactly the same if it's below the 200-day moving average, it's trading downwards. So this is a great way to quickly just indicate which direction the market is trading. And in my opinion, the best strategy to use in trading Bitcoin or Ethereum is to trade with the trend. This means if we can see that the trend is moving downwards, I'm not going to make a trade predicting that it will suddenly go up, because the chances are it's not going to go up and it's going to continue to trend downwards. So with a combination of all of these tools, I use this to get a good entry point, and I'll just quickly indicate how we can use this all together. So the Relative Strength Index, which is the small purple line at the bottom, will show us whether it's overbought or oversold. When it's oversold, it will be trading at the bottom part, and if it's overbought, it will be trading at the top part. So currently we can see that it is heavily oversold and it is trading at the bottom part. It is also below our 200-day moving average, which means it is trading downwards, and then we can use our 20 and 9-day moving average to indicate when the trend might reverse. We can see here where it trends lower, and this is basically where our moving averages crosses each other. Here we can see that the 20-day and the 9-day has crossed the 200-day moving average, and which basically indicates that it is moving downward quite a bit. Unfortunately, Ethereum and all currencies is like dropping like crazy, so I'm just going to use some historical data where we can see how everything works together. The nice thing about the MACD is it shows us where we can get a good entry point. You'll see on the MACD there's two lines as well. As soon as the line crosses the other one, that indicates that it is moving upwards again. You'll see there's green bars here as well, and usually we want confirmation before we just invest or buy that specific currency. Once it has two bars above the horizontal line and the line has crossed each other, that can indicate that there is some upward momentum. So in this case, imagine we bought exactly here and we held on to the currency because it's above the 200-day moving average. Here where our 20-day and 9-day moving average goes below our 200-day moving average, this is where we will sell our Bitcoin. So let me just quickly indicate how much we would have made if we've done this exactly. When we use that exact entry point and we sold once the 20 and 9-day moving average crossed the 200 moving average, we would have made a 12% return over just a few days. That's why I said my strategy is a bit more like swing trading and not necessarily day trading, because it's okay if a certain trade takes longer than expected. So this is just a very basic way to explain the strategy that I personally use, and it is basically a combination of our MACD, our relative strength index, and 3 exponential moving averages. So hopefully this can just give you an indication of one of the strategies that can really work quite well. With that said, I am not a day trader, I am more of a swing trader. So what I like about the platform is there's no margin involved, meaning that if you placed a limit order and it goes below your limit order immediately, you won't be margin called, meaning that you will immediately lose your money. You can kind of just wait it out if you made a mistake or you predicted the market incorrectly. And ultimately, this will help you to understand your trades a bit better. And if everything goes south, you can just wait it out for the market to go up instead of panic selling and actually losing money.